Welcome back to Broadview on Fox News Radio 1270, a weekly program with updates and discussions of the issues and hot buttons of Northern Nevadans. Phone lines are open at 823-1920. And now here's your host, Jay Davis.
Michelle, my girl, you've gone crazy. Well, right now I want to get Steve Ause. You introduced me to him, Eddie. Political commentary. He's great. Financial advisor and wizard, and also co-host of Nevada Matters. So today we have a little market talk with Steve.
Good morning. Nice talking.
The market seems pretty unstable right now with the violence going on in Egypt and everything. But I'm wondering, what are you telling your clients to do?
Well, I'm in the market now. I'm fully invested. I have been since about the middle of September. The S&P, which is one measure of the market right now, is at about 1,300. And around this level, or 1,313, we may have a hard time advancing. We may bounce off this number and head lower, or if we can break through this level with some enthusiasm, then I think we might have another leg up in the market.
Well, now, how did you come up with this number?
The market has an uncanny way of dealing with numbers it's been to before. The market, when it was falling off of a cliff in 2008, it rallied for a while, it hit 1313, right where we are now. It failed to get above that level, and it kept falling off that cliff. So it couldn't penetrate it before, and it may stall or have a bit of resistance to try to get above this level.
And it really works that way?
Well, I'll give you an example. Take the late 90s. Everybody was making money in the late 90s. You, your neighbor, your acupuncturist, your golden retriever, everybody was in the market, and they were making tons of money. And we were dancing in the streets. And the S&P hit 1553 in the spring of 2000. And we were delighted. The fears of the computer meltdown in 2000 that was supposed to happen was behind us. But then the market dropped 50%, and it bottomed out later in 2002. And it was a very painful experience, especially for retired people that didn't have a lot of time to recover.
Yeah, everybody hit bottom.
We did, yeah, and it took a couple of years to do so. So then it began to climb, 2002 and 3 and 4, and it kept moving up. And then in 2007, we hit a high point again. Now, in 2000, we hit 1554. So as a rhetorical question, since we hit 1554 in 2000, where do you think it stopped in 2007? Remember, it was at 1553 in 2000, and it was only a 1.5 point difference. The market, once again, had a hard time getting above a level that it had set a full 7 years prior. And this time, the market fell 57% and bottomed out at 666 in 2008.
Ooh, that's scary.
So the market has a way of either finding old levels as something of a floor that it provides support and keeps it from going down further, or sometimes that prior level finds like a ceiling or a resistance that it has a hard time rising above.
Well, it seems pretty unpredictable. How do you figure that out? Is it really that easy to figure it out?
No, it's not just that simple. You know, it's a little bit like a visual representation of the market. It's like an EKG. You know, when you go to the doctor and they look at that visual representation of your heart, they've been doing it for a long time. If we can flash back to Chevy Chase in Vacation.
Oh, yes. Hilarious.
And he was with Cindy Brinkley out by the pool, and he's babbling on, and he says, my credo, if you have to have a credo, he says, well, my motto, if you have to have a motto, is it's not just what you make, it's what you keep. So I'm very tactical with my clients. I'm happy to pull the troops out of battle at times. I've helped clients dodge the 2 big bullets of the last decade. So I advise clients for the moment to stay in the market, have the finger on the trigger, but knowing when to pull that trigger is the hard part, and that's what I do. Our industry doesn't make money when your money is under the pillow. It doesn't want you to get out of the market. It wants you to stay fully invested all the time, maybe because nobody thinks they know when to actually get out of the market. But I am one who's tactical, and I'm not afraid to get out of the market. And as I say, I've dodged the 2 big bullets in this last decade.
So when you get out of the market, then you get some money, and you can put that away under your mattress, under your pillow, and you can put some more back in the market and reinvest. But I think that's a smart thing, too, because I want to spend some of that money.
Well, that's true. That's true. Well, if it's retirement money, too, you want to build a nice little nest egg so that when that time comes, when you get your golden watch, that you have something to help fund your lifestyle, because it's quite likely Social Security is not going to be the answer.
Well, right now that sounds pretty scary anyway. Nobody's giving out those golden watches anymore. They're giving out those pink slips. Indeed. Steve, how could listeners get a hold of you?
Well, thanks for asking. My website, a good source of information, is www.steveause.com, or I'm here in Lake Tahoe at 831-1963.
Thank you very much for your time. We appreciate the great information. We'll talk to you next week.
Great. Thank you, Jay.